Hey, good morning, guys. It's Armand from Cool Trading Tools here. So we're gonna go over the market open start this week right now. So we'll start off. We'll go over the ETFs that we've been tracking lately: QQQ, SMH, and then maybe go over a couple plays we're watching into the day to day. It's a kind of a quiet open, but we'll go into like what we're watching and what our plan is going forward here. So to start here, we got the NASDAQ last week, had a strong weekly candle to close, right? So let's just turn these off for a second. Bruh. Strong weekly close candle here, right? So that might signify that we maybe get a short-term bounce here. I would maybe expect we either break this high this week or we maybe turn inside before we maybe get a little bit of a weekly bounce. We'll see what happens there. I think it's important to remember, though, that the daily trend is down still. We just kind of recently broke down and we're kind of running into some of these levels now. I think we might have a chance to go a little higher here, but it's just important to remember, just like here, when things are moving up, you don't want to fight the trend. Same with this way when things are moving down. And I'll go over a little bit on how I plan to handle this too at the end of the video, because I don't think things are necessarily easy. Downtrends are different than uptrends, and they do require a little bit of different tactics. So we'll be watching that. Like I said, we move for a weekly chart, signifies to me that a bounce may be getting started. Daily trend is down, so we would want to change that. Do we make enough room here, right, for a daily higher low to form somewhere around here, right? We'll see on that. We can use the hourly chart too as our guide here, an hourly trend change. So I think we might probably still move lower, but we'll see how things are going with that. So SMH still weaker here, rejected off the previous support levels on Friday. Same concept, right? I think had a little bit of a strong bounce here, strong volume on this weekly candle here. We still need to go and see if we can set the daily higher low somewhere here. So I think that's what we'll be watching here. If you're a bull, you're going to want to watch for pullbacks on these names. I think that's the safer entry than just starting to buy here. Wait for a daily higher low to play a risk off of. Or as we get closer here, you can play a risk off of there, whatever your bias is. But I think buying into weakness is a little bit better than buying into strength if you are going to be bullish on this market right now. So I will go over a couple stocks today. I still don't see a ton to trade here. Soxel has been the go-to. I've been talking about it for weeks. I know it's kind of maybe getting a little redundant here, but this is also one of the lessons I get at the end here is that it's still giving great ATR and volatility. So bear markets, a lot of what happens here is right. Things just stop giving great opportunity here, right? Things that were working before start to really lose their volatility. So when you find something that's working in these markets, you kind of want to juice it a little bit. Just keep trading the same name until it proves to you that the volatility is gone. You know what I mean? So at the tail end of trading that name, you might start to realize, okay, I'm losing a little bit more. The winners aren't paying off like they were. You'll kind of notice it just anecdotally as well. You can also, like I said, use the ATR percentage as a measurement. Usually before that goes down, though, I'm already seeing the signs. So our video last Friday went deep into ATR percentage and how it works. Um, but yeah, so I think honestly, I'll keep trading this until the volatility. It's still at 22.35 on a $104 stock. That's like a $20 ATR. I'll keep trading this until the juice is gone. And I do think the juice might be leaving pretty soon. Just running in the 200 SMA holding, I wouldn't be surprised. I'd be more surprised if we just break the lows. I mean, news can cause that if we get something with the Iran war, or et cetera, et cetera. But I think most likely is we probably enter a little bit of a range coming up here in the next week or two, which means that volatility will die on this name. So we'll see. We'll be keeping an eye out for that. And but as for now, the volatility is still good and it's still tradable. So the next thing I wanted to look at here was GME came out with some news here. GME off 11% of earnings, ATR surgeons. So our newsletter is free for anybody who wants to subscribe, but it also is a built-in search company news where you can get the company news as well. And there, GME announces private exchange for 1.4 billion convertible senior notes. I was reading this a little bit earlier. Essentially, my understanding of it is they're diluting the company, right? The company, GME's done a lot of dilution to raise capital, right? And smart on there from a business perspective. They've raised capital by dilution. This one's a little bit different. They're using the dilution to pay off debt. So instead of using that capital they raised in previous dilution cycles, they are just choosing to give away some more shares for money, use that money to pay off debt that they owe. So it's more dilution. What do I think of it? I think it's a pretty difficult thing from like a business perspective. I don't know. We're trading right now, so I'm not going to get too much into like the fundamental analysis. I do think Jimmy did a smart thing. I mean, this entire run from 2021 for 5 years, they've been diluting the crap out of shareholders, and which is why it hasn't done anything. But long term, like let's just say 10-year outlook, they've put just tens of, I don't know how much it is actually, but billions and billions and billions of dollars in the bank through dilution. So that business that was failing, the GameStop brick and mortar, who knows what they come up with in the future. They have enough money to redo the business now into something else. I mean, they can create a whole new business because they've diluted so much. So long term, I'm not sure. What makes me a little nervous here, right? So I'll show you is now with this gap down, people have been holding for the last 2 years. Almost every single person that has bought in the last 2 years, I marked down this last level 1873. It's about a buck lower. Every person who has bought and held over the last 2 years is now going to be underwater. So anybody who is like holding after this squeeze for another squeeze or whatever their plan was, they are going to be underwater now with this gap down on this. It's gapping under all these major levels here. I mean, it's getting close, but so my thought process on this first off, it's dilution. So should that be bearish? Maybe. Sometimes dilution isn't always bearish. It's not a good thing, but from like a short term perspective, it can have varying results. But just from a technical perspective, now every single person is underwater here. Is that enough that on top of the dilution news, people are underwater? Like, okay, I've held this for a freaking year now, 2 years, whatever, hasn't moved. I'm just going to bail out. I can see it's about to break a technical level. Does that cause enough selling pressure to get some momentum to the downside today? I think that's a possibility. So it's something to watch. I'm not super confident directionally on what this will do with it. I'll go and this will lead to my next point that when the market gets like this, I showed you earlier that volatility is dropping off. You kind of want to stick with the news plays that are moving to their own tune because most stocks in the market might become a little bit more difficult to trade from a trend perspective. So what happens is when markets get a little bit more, like let's just say we end up with a little bit of basing cycle, when the market's in a bearish, many stocks are going to kind of just trickle down and do nothing. And so what happens is it becomes much more important to focus on names that have news that are providing fresh volatility. So it actually can be beneficial. Like I said, in big bull markets, everything's running. First this period, you'll see semiconductors running, then they'll take a breather, then data centers, then they'll take a breather, then crypto, whatever. And you end up rotating into different sectors, and a lot of things look good. In bearish markets or choppy markets, nothing looks good except for individual stocks. And this can be actually looked as a negative, which it can be, but it also can be a benefit because personally, I'm just a hyperactive person and I get distracted when everything's moving. I'm like, my watch list grows 5 to 10 names. It's difficult to keep it, low. And because I am watching too many things and lack of focus, I don't trade very much anything well. Versus when markets can get a little bit of chop, yes, you have to do a little bit more homework to find the names that are moving, but usually it's like one or two options. So you're kind of hyper focused. And honestly, sometimes I see some good results in choppy markets from a day trading perspective. It's really not good for swing trading at all. But from a day trading perspective, that focus on whatever the volatility is moving can provide some good results on that. So they're diluting to pay off some debt. I'm not sure what that does long term, but we'll see what's watching with that. What's happening with that? I'll go over one more thing because my watch is relatively small today. Like I said, I'll probably be watching Soxel on this GME. I just saw this news on SpaceX here. So they got their earnings, I think, 8/4 tomorrow, Tuesday. But we'll see what happens with here. It sold off a lot into that. But what I'm seeing here on this, SpaceX shares are under pressure. Lockup expiration begins on August 6th. So usually when a stock IPOs, depending on the prospectus, which is like the rules and such before the IPO for the company, there's usually a lockup period that you can't just like unload your shares as soon as the market opens. So I mean, I don't know all the rules of that, but oftentimes you're not allowed to sell the shares right away. So there's a period of lockup. So oftentimes what happens is after the IPO lockup period happens, so this one says 20-30% of locked shares will become eligible. You can start to sell your shares. People that were in the company when it was private, the underwriters who took shares, etc., whoever was able to get shares before it from the pre-IPO, some of them can sell now after the lockup period, which oftentimes starts to cause pressure to the downside because usually an IPO is higher and moves higher oftentimes than what people were getting in pre-IPO. That's usually the rule of thumb. So lockup periods expiring can often provide sell pressure onto the stock. A little bit curious on this because this has already pulled back from 226 to 50% drop to 100. Now, I still think it's overvalued, but from just a pure technical perspective, we got earnings tomorrow and it's already fallen a lot. So, what does that mean? I'm not sure, but it might provide some volatility. Let's just say we bounce big into earnings, lockup happens in a couple days here. Maybe that's people taking, okay, I was nervous because it sold before I could even have a chance to sell, right? Just say you're in the perspective of I always like to put myself psychologically in the perspective of what are other traders doing. Say you're in pre-IPO and this period of time happens, right? And you're like, oh my God, I made so much money off this IPO. This is amazing, right? Then you're sitting there, you cannot sell, and then you're just watching this thing drift 50% lower day after day after day, and you're like, oh my God, where are all my gains going, right? We get a gap up on earnings up to here, your shares unlock, and you're like, well, I'm going to take some profit on that. So that could provide, if we sell off into the pre-IPO lockup period, I'm not sure if that provides any psychological, I don't know if I see any idea, but that's an idea I just kind of came up with and had that, okay, if the lockup happens and we get a good move off the gap up or off the earnings tomorrow, when the lockup happens like 2 days later, do people that weren't able to sell now use that opportunity as a way to sell? So just because of, they're stressing out watching this thing drift lower for the last 2 months when they were all excited about the hype beforehand. So, yeah, I think that's what I got for you today. Like I said, GME, dilution stuff, SpaceX, watching that lockup idea coming up, markets. If you're a bull, you want to look for buys on the daily higher lows. You can move. I would recommend moving to the hourly and 15-minute charts and watch to see. But yeah, and then keep juicing the winners. Like when you get into markets where it is a little bit choppy, takes a little bit more work, but find the names that are moving to their own tune. They have news, so they're going to have volatility regardless of what the market does. Focusing on those names from a day trading perspective, and then use the ATR percentage. Make sure we're having enough volatility for the stocks you want to trade. So awesome. You guys have a good trading day and good week. Thank you.